And we are live. Ladies and gentlemen, welcome to the Dylan Holy Experience. More specifically, your midweek market recap. Thank you to all the members of the millions that are tuning in live at 6 p.m. Pacific Standard Time, 9 p.m. Eastern Standard Time for those of you on the East Coast. Shout out and nothing but love to my East Coast brethren. But we have a midweek market recap to get to. S&P 500 futures are little changed as investors weigh Fed outlook on rate hikes. Let's take a wee gander. U.S. equity futures were slightly higher on Wednesday evening as traders digested the latest policy update from the Federal Reserve. Futures tied to the Dow Jones Industrial Average added 71 points or 0.2%. S&P 500 futures rose 0.2% and NASDAQ 100 futures advanced by 0.1%. The major averages tumbled in regular trading, with the Dow losing more than 530 points or 1.6% after rising as much as 200 points earlier in the day. The S&P 500 and NASDAQ composite each dropped more than 1.6%. The Fed's decision and subsequent comments by Chair Jerome Powell at the conclusion of the policymakers' two-day meeting weighed on stocks. The central bank raised rates by 25 basis points as expected. It also hinted that its inflation-fighting tightening campaign could be nearing the end, with the removal of the phrase ongoing increases from its statement. Let's take a gander over at what's going on with the Fed. Obviously, they rose interest rates by 25 basis points, a quarter of a percentage. But there's some other important stuff in there. Let's take a wee look. Financial conditions have tightened more than the market shows, Powell says. Financial conditions seem to have tightened more than the U.S. benchmark indexes indicate. Federal Reserve Chair Jerome Powell said during Wednesday's press conference, quote, "The traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions," end quote. Powell said when asked what financial situation would warrant an interest rate cut, especially if credit conditions were to further tighten. Concerns of a credit crunch, which occurs when banks significantly tighten their lending standards, have grown amid the banking crisis. If tighter lending conditions sustained, Powell acknowledged that could easily have a significant macroeconomic impact a significant macroeconomic impact which would be factored into the Fed's policy decisions. Quote, "The question for us, though, is how significant will that be, and what would be the extent of what the duration would be," he said, adding that the rate cuts are not in our base case. So it seems like we've been out of the aggressive rate hiking season for 3 months. I mean, the last time, or hell, 4 months at this point. I mean, the last time they bumped interest rates 75 basis points was in November. They raised interest rates by 50 basis points in December. So, we've definitely reached a point in that curve where we are not doing super aggressive interest rate increases anymore. I think a 25 basis point move was solid, and we can actually talk about where that actually brought us to. So this would bring the benchmark funds rate to a range of 4.7% or 4.75% to 5%. So I actually think they could have done it by 50 basis points. I'm all about super aggressive monetary policy. Like we should quantitatively tighten a little more, and I think we could tighten more aggressively. Obviously, debt-based assets are going to falter. But hey, man, Don't predicate the system on debt. That's my view. Anyway, yeah, so they bumped it to 4.75% to 5%. So that's, again, it's the highest they've been in 30 years. And in the wake of recent turmoil for regional banks, Chair Jerome Powell assured the public that the Federal Reserve will use, quote, all of our tools, end quote, to keep the banking system safe. AKA, they're just going to print more money. Come on, guys! They have the infinite money generator right there. You just press a button and you just print out $1 trillion. It really is that easy. There is still a pathway to a soft landing. Federal Reserve Chair Jerome Powell also says. Federal Reserve Chair Jerome Powell said it's too early to say what effect the banking crisis will have, but the central bank leader expects a pathway, quote, that still exists, end quote, to a soft landing. I don't know, man. There's a lot of things that are not showing soft landing, and I guess this can bring us to our second piece of information or news for the evening. Home sales actually jumped 14.5%. So this is a perfect storm of the median home price dipping for the first time in a decade. Mortgage rates coming down from highs hovering between 6 to 7%, and this is also mostly due to the banking financial failures that we saw, basically over the last 2 weeks. They had to sell a bunch of equities and bonds and government securities, so that brought interest rates down a little bit, about 0.5% or so. They'll probably end up going back up, but anyone who snagged a home down from the 7%, I think is a good move. Probably not a great time to finance a home, though, my humble opinion. Home sale volume was still 22.6% lower year over year. So yeah, there was a nice jump in February, but we are still down nearly a quarter. We're still down nearly 25% from where we were a year ago in terms of home buying volume. But let's take a look at what's going on with this lending crisis, because they were talking about there could be a credit crunch where banks have significantly tightened their lending standards. I mean, if we take a look here, just looking at Fred, which is basically like the St. Louis Federal Reserve, it's like all of their numbers. They compile all of this data. It's absolutely fantastic. If we take a look at the average interest rate for a credit card, if we take a look at the average credit card interest rate, it's the highest it's ever been, 19.7%, and that was in November. That was in November of 2022. So, we haven't even had really 100 or 1.25% in terms of actual Federal Open Market Committee and federal borrowing funds rate. That hasn't even been factored in here yet. But credit is now more expensive than it's ever been. Interest rates, the average auto loan is 8% now. Yeah, man, it is getting serious, and I think Max Payne is okay. I mean, raising interest rates where we were from 2-3 years ago, that is Max Payne, dude. We went from 0% to nearly 5% within a year. That is a lot of pain, and I don't think it's been priced into the market yet. I know that it's well, Dylan, you're not a trader. Dylan, you're just talking about possibilities and stuff like that. But it takes 12 to 18 months for a single interest rate move to really take effect on the market. It takes 12 to 18 months. So we are really just starting to feel the ramifications of that interest rate environment. My humble opinion, of course. Never financial advice on the Dylan Holy Experience. If we take a look over at our indices, we can go over to TradingView. We haven't visited this for a little bit because, you know what? I think it's nice to do the stock analyzing and the market analyzing. But really, all this stuff is just astrology for men. You just need a dollar cost average. But we can definitely take a look and see at least what these indexes are at least telling us. If we go to the macro here, let's just head to the 1 month. Doesn't look great on the 1 month. We're still generally below our moving averages in terms of our momentum indicator. So there's not a lot of buying momentum. Seems like a little more sell volume, if you ask me. That's just on the Dow Jones. If we take a look over at the S&P 500, it's just kind of chilling out right now. It's just kind of vibing on the. Is this the 55? Yeah, it's just vibing on the 55-day. Exponential moving average. That's all good. Bitcoin, ever since they the banks started failing, Bitcoin has been having a decent little rally, about 40%. So it went from within the last, I mean, even if we take a look at the last 2 weeks, I mean, it's gone from 21,000 to 27,000 within 9 days. That's a pretty big move. Is it over for Bitcoin? Are we going to keep going up? Are we going to go down? I don't know. I think going off of historical precedent, whenever there is a downward move, or whenever the Fed raises interest rates, typically there's a sustained downward path for any equity. That's just what I've seen. As bonds and interest rates go, or as interest rates go up, bonds actually go lower because interest rates and bond valuations are inversely correlated. So as interest rates go up, bonds go down in terms of value, and vice versa. As interest rates drop, bonds go up in value. They become more expensive. But equities, every time there's been an interest rate increase, they actually caught me for the first few. I'm not even going to lie to you. I thought maybe like, oh my gosh, maybe there is going to be a soft landing. Maybe they can raise interest rates and also the indices can increase. I haven't seen that. I was played like a fiddle, and I have some cash on the side. I'm not going to lie. I moved out of some of my crypto. I sold a little bit of VFox, sold a little bit of some Shadow, sitting in cash for right now, and we're just going to see what happens. That being said, I still am dollar cost averaging into my 401k, into my IRA, into some Bitcoin, and into some Ethereum, and I am buying the S&P 500. Obviously, never financial advice. Everyone has their own nuanced financial situation. Dylan Holy Experience is an all-encompassing thing. I can't give any one-size-fits-all advice on here. Sorry, y'all. But I'm still dollar cost averaging. I'm not really worried about it. We can take a further look at some of these other tech companies that, Microsoft, they're kind of on the upward trajectory. Same thing with Apple. Amazon was a little shaky because they had some layoffs, and we can talk about that too, actually. Amazon laid off another 9,000 employees. Let me see here. Yeah, Amazon laid off another 9,000 employees. It's going to be mostly in their, come on baby, I saw this. There we go. Yeah, so Amazon's going to be eliminating 9,000 more positions, mostly in the Amazon Web Services, People and Experience Technologies, Advertising, and Twitch. Obviously, to the 9,000 people that have been laid off, best of luck to you. But again, it all comes back to tech companies are bloated, and it sucks that people are getting laid off, but for a bottom line standpoint, the business needs to do this. I mean, Amazon has been hemorrhaging money. Their profit margin in Q4 of 2022 was 0.19%. It wasn't. They don't even have a 1% operating margin. Q3 was slightly better in 2022 at 2.26, but yeah, I mean they had a negative operating margin or profit margin in Q1 of 2022. So these tech companies are bloated. Meta had to lay off a bunch of employees too, but they've been moving up since they had announced their Q4 2022 earnings. But we'll see what happens. It looks like there was some resistance here, and I think with this interest rate move, it's probably not going to be the greatest for the market. Just saying. Obviously, I'm not trying to be doom and gloom, but we are in a contractionary macroeconomic period. I don't think that's a negative thing to say. It may go down, but it also may go up. Who the hell knows? I'm 20 years old and I'm talking about this stuff on the internet. This is crazy, but. Yeah, I think dollar cost averaging into major indexes and into single stocks, they're at the end of the day, they're businesses. So if you like the business and you've done your due diligence, I just have Tesla pulled up. I'm not an active shareholder in Tesla. I am an active shareholder in McDonald's. Love me some McDonald's. But yeah, just do your due diligence. My king, shout out Tanner. I love you, man. Thank you for tuning into the Dylan Holy Experience. We're talking about McDonald's. Also, why is your mic peaking so much? Because I have a cheap mic. Let me see. Let me know. Is this better? Is this better on the mic? Let me know. I'll tune it. I'll bring it down a little more. Just let me know when that sounds good. Hopefully this is better. Testing. Yeah, bro. We've been doing the Dylan Holy experience like this for the last 6 months. So, yeah, maybe it has been peaking for like 6 months. Not really, lol. Okay, then we're just gonna keep it like normal, and I'm just gonna keep talking. Yeah, man, this is just like me in my living room with a Blue Yeti Pro, and I have like basically a little sock over it. It doesn't really make a difference, but it looks a little cooler. So, yeah, sorry it's peaking. Sorry for your eardrums, but at least as of right now, this is a one-man show, and we're just gonna keep rolling with it, baby. But interest rates, yeah, man. They're going up and stocks be going down, historically speaking. Also, past performance does not indicate future performance. So maybe we do have like an insane rally right here. Maybe we have an unprecedented stock rally, and for the first time in history, we beat the correlation and interest rates go up and stocks go up. Who would have thought? Now, speaking of stocks and publicly traded companies, let's take a move over to Google and Alphabet as a whole. Google has opened up its Bard AI for testing by users in the US and UK. Bard AI, how do you like the video I sent you? I liked it. I did like that. Yeah, man, SVP. So, dude, Silicon Valley Bank could just be like mismanaging people's money. And we can actually talk about Silicon Valley Bank for a little bit. I talked about it last week, but I'll talk about it again since you're here. The funny thing about Silicon Valley Bank is everything that happened to Silicon Valley Bank has basically been the same thing as FTX. I mean, there's been different nuances in terms of like insider trading and stuff like that, but the risk management was just as bad as FTX. And not to also be that guy, because I don't want to doom and gloom, but everything that happened to SVB was due to fractional reserve lending. Woo! Basically, how fractional reserve lending works is people, they give their money to the bank, right? They give their money to the bank. Let's say this guy gives $2,000 to, not with Bank of Dylan Holy, because we're never going to do that. But let's say they give $2,000 to ABC Bank. Then that bank, federal law allows that institution to invest up to 90% of that money. So they could take that $2,000, put $200 into a vault to cover consumer deposits, and then take the other $1,800 and loan it out to people, or invest it into treasury bonds. Some companies even invested into the S&P 500 if they want to get real risky, or buy single stocks if they want to get super duper risky. But in most cases, they buy treasury bonds with it. So they take this 90%, they take this $1,800 and they invest it out. So it is a pretty gross overstatement, I think, to say that every single bank is loaning out 90% of consumer deposits. But what happened to SVB, if it were to get dire enough, dude, if enough people were to go to JP Morgan Chase and try to pull their money out, there would also be a liquidity crisis, bro. There would also be a bank run. Like, they've designed the system to be insanely impacted by bank runs. And this is like with any major financial institution. I definitely think that JP Morgan probably has a better risk profile than something like a Silicon Valley Bank. And I'm not an active shareholder in JP Morgan. I'm not short JP Morgan. I don't hate JP Morgan. I don't bank with JP Morgan. But this is the biggest financial institution on planet Earth. But yeah, like they have every bank generally has the exact same risk profile. And speaking of bank, as they say, a recession happens when people tell you a recession is happening. It's a psychological thing. Yeah, I mean, and humans are also lagging indicators. Like, we were told that we were in a recession in June of last year. In June, we were told that we were in a recession. But the recession really started in, February or March. People just didn't know. Oh no, my mic is fucked up. Okay, apparently my sister's also saying that my mic is fucked up. Hold up. Give me 1 second. What is going on here? What is going on here? Oh Lord. What is going on here? Okay. Yeah, my sister's saying that my mic is also a little crispy, but I feel like this is just my mic. Maybe I'm just a little closer to it. That might be it. Maybe I turned my gain down. Hold on, give me 1 second, y'all. Let me know if this is better or worse. Is this better or worse? We'll do it this way for a little bit. Yeah, okay. Is this better or worse than before? Let me know. Because I do not want to blow your guys' eardrums out. The same? All right, let's go, baby. Maybe this is just the Blue Yeti Pro. That might just be a Blue Yeti Pro issue. Oh, okay, hold up. Is this it? Let me know if this is better. Let me know if this is better right here. Okay. So, shout out to the 30-second stream delay. Never mind, you just got loud and it's terrible again. Okay. Let me know. I think it's a software thing. Okay. Is it better now? Because you sound fine in call. Huh. Fine in call. Huh. Fine in call. Okay. Is this going on? Is this better? Is this better? Is this better? Is this better? Is that better? All right. Dude, shout out to audio issues in the middle of stream. Yeah, I don't know, man. I'm just going to continue on. Speaking of major financial institutions falling apart, Credit Suisse had $17 billion. Right now it is. Okay, cool. I'll take it. 17 billion. Yeah, I just changed my gain thing on my mic, so maybe that did it. $17 billion in bonds were wiped out for Credit Suisse bondholders, and let's just say it has not gone down well in Europe. Let's just move it back up a little bit. One section of Credit Suisse's bondholders is set to be wiped out following the struggling bank's takeover by UBS. UBS is buying Credit Suisse for $3.25 billion after Credit Suisse lost a shit ton of money and clearly had a bunch of liabilities that were going to expire worthless. But the Swiss regulator announced that on Sunday, the so-called additional Tier 1 bonds, which were basically put in following the 2008 financial crisis to protect investors, those Tier 1 bonds were going to expire worthless. $17 billion in those bonds were going to expire worthless. And these are widely regarded as relatively risky investments, but it will be written to zero as part of the UBS deal to buy out Credit Suisse. The move has angered Credit Suisse bondholders as their investments have been seemingly lost. While shareholders will receive payouts as part of the takeover, usually equity investments would be classified as secondary to to additional tier 1 investments. So actual shareholders of Credit Suisse who own Credit Suisse stock, they're typically seen as like secondary investors after the bondholders of Credit Suisse, but the bondholders of Credit Suisse aren't going to be getting anything. Therefore, the decision can be interpreted as an effective subordination of additional Tier 1 bondholders to shareholders, says Goldman Sachs credit strategists in a research note published Sunday. It also represents the largest loss ever inflicted to additional Tier 1 investors since the birth of the asset class post-global financial crisis. That's about it. Yeah, Credit Suisse be losing money via very risky investments. What are you going to do, man? Let's move over to Google, talking about their Bard AI once again. It's another large-scale language model. You know, I'm not like I signed up for it. I'm part of their wait list, so we're gonna see what happens there. But yeah, I don't know, man. I think it'll probably get better. I think that AI, as it is right now, it's still kind of dumb, but I think it's going to get a lot smarter. They said that the LaMDA, which is the language model that Bard AI is based off of, if we take a look over at LaMDA, they said that, so the former chief of AI at Google, or the Google engineer Blake Lemoine, made claims that the LaMDA chatbot, I guess now Bard AI, has become sentient, and they said that it passed the Turing test But if you take a look at some of the responses that it gave, it actually underperformed ChatGPT. I actually like ChatGPT. ChatGPT is pretty cool. I've been messing around with it. They call me a little late bandwagoner, but I dig ChatGPT. I like it. I can't deny. The models were trained in, this is something cool. The models were trained in collaboration with Microsoft on their Azure supercomputing infrastructure. And quote, the supercomputer developed for OpenAI is a single system with more than 285,000 CPU cores, 10,000 GPUs, and 400 gigabits per second of network connectivity for each GPU server. So goddamn, man. Yeah, they just be having a lot of processing power. But we'll see what happens. I think the AI wars are a really interesting thing. I think that will they end up using this AI tech to suppress people's thoughts and probably further vie for control? Yeah. But I also think that there's going to be some really important things done with it. And I do think one of those things is going to be self-driving. I know people, they don't want truckers to have their careers basically get sunset by the self-driving long distance semi-truck stuff. But dude, whenever there is a major technological advancement, there is a significantly larger industry that comes up following that. Like if we're taking a look at like horseback to, I mean, let's just take a look at like the train. From horseback to train, people were apprehensive towards the train because they were like, "Oh, it's going to kill jobs." It's like no, it just like created an entirely new, significantly larger industry. I think that's going to be the same thing with AI. I think there are going to be a lot of current jobs that are displaced in this paradigm, but there's going to be a new paradigm that shows up. Do we need a universal basic income? We can address that once we get to that point. I think as of right now, how the systems are set up, we are not even handling like Social Security well. So I don't know, and that's for people that can't work. I don't know about putting any able-bodied person on a UBI. I don't know if our current system can handle that or if it ever will. But I don't know. I'm cool with AI. I like AI. I'm probably going to have some right-wingers come after me for that. But I dig AI. I think self-driving is good. And I think automation of things is inevitable and is conducive to the advancement of humanity. Yeah. I'll say that. And I think with that, I will probably end the midweek market recap. We went off on a bit of a tangent throughout, but you know what? That's how we do it on the Dylan Holy Experience. That's how we have a fun time, man. Sorry to everyone who had to listen to my crispy mic. We're gonna work on that. We might work on that. I'll see what happens. Apparently it's a software thing, so we'll probably be able to iron out those kinks. But thank you all so much for watching. If you like what you saw on the Dylan Holy Experience, we can head into our subtle little plug territory. First things first, be sure to give us a follow at RealDMH on Twitch. So that's where half of y'all are watching me right now. The other half of y'all are watching me on youtube.com/@DylanHoly. So be sure to give me a subscribe there. It's much appreciated. Thank you all so much for watching. We have some videos up, some long form content, if you will. And every single time the Dylan Holy Experience goes live, it's on Twitch and YouTube. So you can watch me in stereo if you really want to go crazy. Now, lastly, twitter.com/@RealDylanHoly. That's where I'm most active. I'm back on my bullshit on Twitter. Whenever we go live on the Dylan Holy Experience, we're always giving you at least a 30-minute heads up over on Twitter, and we let you know as soon as we are live as well. Also, every single market day, I give my key takeaways. So whenever the market is open, the Dylan Holy Experience is open, and we are giving you the most important hand-parsed pieces of information that we find for financial news or political news on the internet every single day, as well as just like general important pieces of information that are sporadic as they drop. Like as the news is breaking, we give you that breaking news. Also, we give market moves. So whatever the indexes are doing, we're always keeping you up to date on that. So be sure to follow me at Real Dylan Holy. I also live tweet WWE stuff sometimes. So that's always fun too. Anyway, if you like what you saw, thank you so much for enjoying, and y'all have a great rest of your night.